Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring Live, and today is Thursday, August 29th, 2019. Thank you all for coming today. I appreciate you spending your time with me and investing your time in watching this live stream. We are now in the final hour of the market, and as I mention every day, I believe that the prices that you can get as close to the close of the day are the most valid prices of the day to make your buying and selling decisions from. And that's because during the day you have the algos in control of the prices, you have a lot of noise. But at the end of the day, the large financial institutions, the market makers come in. They are the most well equipped, both intellectually and from a technological standpoint. And I believe that they control or move the prices to the prices that are the most valid prices of the day. And so that's what I want to, those prices are the ones that I want to make my buying and selling decisions from for my entries and my exits, not just random noise during the middle of the day. So let me make sure we are all working today. Yesterday I had a technical issue at the end of the day. I really don't know what happened. I was just talking, going on. I didn't lose my internet connection, but for some reason, the my encoder lost connection with Google and it went out. So I apologize for that, and I hope that we're going to be okay today. So anyway, if you guys can hear me, please let me know. I just want to make sure it's working today like it's supposed to. So we are having a big day today. The Dow is up 331 points, the Nasdaq's up 116, and the S&P is up 37. We're off of our highs, that's for sure, but there was some good news potentially with the on the trade war front, and of course the market's going to respond to that. So regardless of what happened, I'm glad it did because we're having a really nice day. And we shall see where the market closes today. So the format for today. Oh, hey John, how you doing? Good to see you. I'm glad you can hear me fine. Thank you very much, and I hope you're doing well. Thank you for coming by today. So the format for today, first of all, as always, we're going to run the U.S. legal disclaimer. Then we're going to go through all my current positions. We're going to talk about when I bought them, why I bought them, and how I'm going to manage them either to the upside or to the downside. So we're going to talk about that. Then we're going to do a few minutes on trader psychology. As I also mention every day, trader psychology is the skill that you need to learn to become a good trader and to be a successful trader. The charts and the technicals, they are important, but in the long run, I believe how you manage your emotions, how you deal with fear, greed, anxiety, frustration, that is the most important skill that you have to learn as a trader. That's the difference between successful traders and unsuccessful traders. And the best advice I can give anybody is look at trading as a long-term endeavor. Don't try to get rich quick. Don't try to make a lot of money quick, because the higher you tune up your emotions, the more mistakes you make, the more fear, greed, anxiety, frustration that comes into the picture and will make you make mistakes in your trading. So, it's kind of a nice holistic way to look at trading, but it's the best advice I can give. Take the long view. Position size conservatively so that any one win or loss does not tune your emotions up. Always try to stay as level-headed as you can, neutral as you can. And in my experience, the best way you can do that is to position size correctly. Don't have too many positions. I never use more than 60% of my count in any positions at all for that very reason. So the way I look at trading is, of course, you have to trade. You're going to have wins, you're going to have losses. But my number one goal is to keep stable, keep my emotional state stable, because I know in the long run, that's what's going to keep you in the game and let those edges play out. So, do yourself a favor, take the long view, stay in this game, learn how to trade, get experience, And I think you'll find that it will work out for you. So anyway, I hope that helps. I talk about it every day, but I do, guys, because I feel like it is so important for you to learn. And then after we get done with the little psychology, we're going to go through my watch list. We're going to go through each stock one by one. We're going to take a look at all the support and resistance levels. We're going to look at the technicals. We're going to look at RSI, MACD, ranges, ATR channels, V1s, V2 entries. And you know, the way I look at technicals, I don't look at them as just lines on the chart or, you know, things crossing over. I'm looking at groups of buyers. I look at each technical indicator as groups of buyers. And if you want a stock to go up, you better be in the company of other buyers. It just makes sense, right? You don't want to be getting in something when a lot of other people are going to start selling. The math just doesn't work out. So I like to look for a combination of indicators that basically tells me there's a combination of buyers coming in at that level. So anyway, we're going to go through each stock and we're going to see if we can find that. We're going to see if we can find a combination of indicators lining up, not only just on the daily chart, but also on the weekly chart. It's important to look at things in multiple time frames as well. So, hey, Steve Burns, good to see you, Steve. Thank you so much for coming by. Always an honor to have you here, my friend. Good day today, huh? Great day. Yep. 2 good days in a row. So we needed that. August has been a crazy month. So thank you, Steve, for coming by. I really appreciate it. All right. And then after the market closes, if anyone has any questions about anything I discuss, please let me know. I'm happy to clarify it for you. If you'd like me to take a look at any particular stock that you're interested in, I'm happy to give you my humble opinion. If you have any trading issues that you're dealing with and you feel comfortable sharing them in the chat, please do, and we'll see if we can work through it and see if we can come up with a solution. So, all right. And then I guess that'll be it. And then after that, I will go hiking. And so anyway, I hope that this live stream holds today. Something happened to the connection yesterday, so let's hope it holds. If it does not hold, I apologize in advance, because if it breaks up, that will be that, and I'll have to have my tech guy come up and look. But anyway, cross my fingers, and we'll see what happens. So, all right. Well, let's get on with it, and I'm going to go ahead and play the U.S. legal disclaimer. I'll be back in about 40 seconds, so hang tight, please. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. All right. Got that out of the way. Well, let's get down to it and start going through my current positions, and we'll talk about them. All right, so here's Amazon. I did buy Amazon back here on the 26th of August, and the reason I bought it was because the previous day we closed under the 200. Once it closed back over the 200, that was my entry signal to buy it. This is a good long-term approach, mechanical approach to trading Amazon, staying in while it's over the 200, getting out when it's under the 200 on a closing basis. This is a discretionary trade for me. I'm not going to just, I mean, it's valid to just hold this and just hold this, you know, for a year if it keeps going up. But the reason that I don't trade individual stocks on a mechanical basis are that you have to hold through earnings 4 times a year. And I don't like to put myself at that kind of risk for an earnings surprise. So this is a valid signal. Previous day closed under, next day closed over. It had 2 days after that of testing underneath the 200. There were no more sellers down there. And today, of course, we had a nice move up. So this is a discretionary trade for me. I have the option of getting out if I don't like what happens with the price action. You can see I did hit 2 profit targets today, one here at 1781 and one here at 1798, right near the top. So this is one of the reasons I like to phase out. I like to take something when the market gives it to me, not the full position, but a portion of the position, and lock it in at higher prices when the market, when people want to buy, I want to sell it to them. So currently, right now, I mean, this isn't looking great. It looks like we're closing lower than halfway of this bar here. Well, actually, no, because the bar actually is this big from yesterday's close. So it's still fine. At this point, since it's moved away from my entry point, it's moved up nicely away from my entry point, I will start to trail this stop now. I'm not going to let it go all the way back under the 200-day moving average. So most likely what I'm going to use here is a close below the previous day's low. So tomorrow, if we close below today's low, I would get out. If it continues to move up, I'll probably use the 5-day as my trailing stop. This blue line up here that coincides with the 1 ATR channel, this is the 50 RSI. If it moves up, goes above the 50, closes back below, that will be my signal to just go ahead and get out of the entire trade and lock in profits. If it closes above the 50, I'll continue to hold it, continue to phase out on the way up, continue to have a trailing stop, but my ultimate profit target up here is the combination of the 3rd ATR channel, the downward sloping 3rd ATR channel, and also the 50-day moving average. So that's the plan. Again, to the downside, if we close below the previous day's low, that will be my signal. If we reject the 50 RSI to the upside, that will be my signal. If we get all the way up to my ultimate profit target without any lower lows, then I will be out of the position. But anyway, nice trade so far today. Glad we got some right there at the top. And we'll just have to see what happens with Amazon moving forward. Did get a positive MACD crossover. That is bullish as well. So things are going well here on Amazon. All right, DDM. So unlike Amazon was a discretionary trade. DDM is a completely mechanical trade. This is a good back-tested approach to trading DDM. If you have a close under the 200, you can buy the next close above the 200. Stay in this as long as you are above the 200-day moving average. You can see I did hit 2 profit targets today, which is nice. Take a few chips off the table. Again, this is not a discretionary trade. This is a mechanical trade, so I'm going to just hold this. Come hell or high water, either two things are going to happen. One, it's just going to continue up, and I'm going to continue to phase out until I'm out of shares. Doesn't matter what the price action is, but if it continues to move up, I will just continue to stay in it until I run out of shares. Or if we close back below the 200-day moving average, I will go ahead and just get out then. But the nice thing about phasing out is, nobody can take away those profits right there. On the percentage that I sold. I sold about 21% of the position. So even if we do go down here, I did at least lock in some profits here at a higher level. And if it goes down, it will help mitigate those losses. Obviously, I don't want it to go down, but I have no idea what it's going to do. But that's just one of the benefits of phasing out to the upside. So positive MACD, we're above 50 RSI. There was some volume today, which is interesting because on some stocks there was not a lot of volume. So anyway, good trade so far. Hit 2 profit targets, and again, this is mechanical. So come hell or high water, I'm going to stay in this until it either just continues to move up until I run out of shares, or comes back down and closes under the 200-day moving average. I like to have discretionary trades. I like to have mechanical trades. Sometimes on discretionary trades, it'll move your way. You'll have one big bar that gets you out, and then it will turn back around. You'll never be able to get back in, and it might be a monster, right? So I don't like to put all my eggs in one basket, especially with my trading approaches. So I have mechanical trades, discretionary trades, overnight SPY trades, sell options. So they're all profit targets for me. They all are a little bit different. And so that's how I prefer to trade. I like to have a multiple approach to trading systems. They help smooth things out. Hey, Aram Hussein is here. Hello, how you doing? Good to see you back. Thank you for coming back. I appreciate it. I hope you're doing well today. All right, connections holding. That's good. So that is DDM. So Etsy today. Etsy is a little bit of a disappointment today on such a big day like this. I did buy this yesterday when we had this nice V1 entry. The previous day we were below the -1 ATR channel. This is a higher low than this low. That's always good. And the reason why, guys, is when you have a lower low and it rallies, when it starts to stall, that's when the people that were lucky enough to have bought down here are going to start selling, and that causes selling pressure. That usually causes it to go back down. But if it's strong enough, even after it starts moving back down, to give a head fake to the downside with the V1 and then go back up, that's a good position to be in, because the people that bought here sold here and down here, and then the buyers were able to overtake again. So the people that bought here sold here. These buyers are out of the equation, which theoretically should make it easier to move up. So I did buy it here yesterday at 54.35. I did hit one profit target within pennies of the top today, so at least that's good. I'm gonna have to make a game time decision here at the end of the day whether or not I want to keep this. I don't like the action here today. But on the other hand, we had this V1, right? Here's day one, here's day two, day two washes out day one, closes above. A lot of times it will come back and test. It will test the trigger point of the day one's close. So did make a higher high, hasn't made a higher low. I mean, a lower low. If I keep this and we close below today's low, 100% I would get out. But most likely, unless we have a real sell-off at the end, I will probably keep this just because we made the higher high. And luckily, got out of a portion of the position right here at the open, which was pretty nice. At the very least, that pays for, tons and tons and tons of commissions. And by the way, commissions can add up, everybody. They can add up to 20-25% of your profits for the entire year. So I would really suggest that you find a broker that has low commissions, because they can really add up. I use Interactive Brokers. Kind of average trade for me as $1. Compare that to like Charles Schwab, where you're paying $4.95. You're paying 5 times the commissions for the exact same thing, and they really add up. I think, what have I spent? Maybe $1,500 in commissions so far this year, but if I was at Schwab, I would have paid $7,500. Makes a big difference, right? So, excuse me. So anyway, that's one of the reasons, again, that I like to phase out, because even if you hit one phase out, it pays for a ton of commissions. So we'll just watch this. Is up a little bit now, which is good, but a little disappointing compared to the rest of the market. But so far I think I'm going to keep it. It's still above my entry point, so we'll just see where it closes. All right, here we go with the famous SPY trade. So as you know, I do buy the SPY each day. At the end of the day, I sell it first thing the next morning. This is a trade that I take every single day. I buy it in the afternoon and I sell it first thing in the morning. And at first glance, you might say, why would you do that? It doesn't look very technical. I'm not using any technicals whatsoever to judge my entry. But it's based upon a long-term back test by Liz Ann Saunders at Bespoke Invest on Twitter. But here you have 2 options. Option number 1 is you can buy the SPY at the open in the morning and sell it at the close in the afternoon every day. If you would have done this each day, buy in the morning, sell in the afternoon, buy in the morning, sell in the afternoon. since 1993, you'd have actually returned a negative 13.9%. But if you did the opposite, which is what I do, I buy the SPY at the close, sell it in the morning. Every day, buy at the close, sell in the morning, buy in the close, sell in the morning. This approach actually returned 634.2% from 1993 up to January of 19. And our friend Stephen Burns was nice enough to do a more recent back study up till about a month ago, not the beginning of 19, but up to about, I think about a month ago, and it returned 712.63%. So, I can attest to you, I've been using this since February 26th. It's been very positive. It's been very profitable. But you can see, this chart is a great example of looking at an edge. And that's what we're doing when we're trading technicals. We're looking for an edge that over the long term will play out. And the blue line here is the buy in the afternoon, sell in the morning. Clearly, there is an edge to this approach, right? Clearly. It does have drawdowns. It has multi-month drawdowns, multi-year drawdowns. But that's what happens with any trading system or any trading approach. You're always going to have drawdowns. Nothing is ever going to go straight up. It doesn't mean that it's not a good system if it's not working well in the short term. But the key there is, you have to, if you have an edge, it's going to play itself out eventually in the long run, but you have to be around in the long run to let that edge play out. So, again, back to position sizing, right? You may step into this and start trading this right at the very top. And if you position size too large, you're going to lose money. So I use a 10% position size every day. So if I had $100,000 in my account, I would buy 10,000 at the close, sell it in the morning, 10,000 at the close, sell it in the morning. But, I think the most important takeaway from this is that, obviously we know the market's gone up since 1993, but it more than all of it has come in the after hours. People bidding it up in the afternoon, selling it in the bidding it up in the afternoon, bidding it up in the pre-market session, and selling it into the open. So with that being said, I did buy it here yesterday at 288.89 and sold it for a really nice overnight profit at 291.70. So this has been doing pretty well recently. Yesterday we had a little bit of a loss. Day before that we had a nice gain. Day before that we had a nice gain. Day before that we had a little bit of loss. But you never know. You can run into strings of wins and losses with this approach. But again, it's just a different trading approach that I have. Doesn't expose you to any risk during the day. Of course, it exposes you to risk overnight. But there is a clear edge in holding stocks overnight over the long run. So anyway, nice trade on this, and I will be buying this again at the end of the day. And our last position is XLF. I did buy XLF here yesterday on the 28th of August. I bought it because previous day we had a close below the 200. Then yesterday in the afternoon we closed above the 200. That is my entry point. This is a completely mechanical back-tested approach. It does back-test profitably over time. So I did buy it here yesterday at 26.41, and I hit 2 profit targets today. So I took some chips off the table, which again, if this comes right back down and closes under the 200-day, I'm going to have to get out. But at least I hit a percentage of my shares here when the market wanted them at a profit, right? Can't take that away from me. And if it goes back down, then it mitigates the loss. So that is why I like to phase out. But again, this is a mechanical trade because it's an index, an ETF index. And so as long as this continues up, I will continue to stay in the trade, phase out until I'm out of shares, or on the other side, if we go down, I will just go ahead and exit the shares I have left if we close below the 200-day. So anyway, I hope that makes sense. We have a MACD crossover today, which is good. You can see the RSI is at 49.25. So this isn't such a great indication that we've found resistance at the 50 RSI. But again, this is not a discretionary trade. This is mechanical, so I don't take that into consideration. But I got to tell you, it's tough for me with these mechanical trades when I see, some bearish indicators. But I'm stuck in a mechanical trade. But sometimes the mechanical trades are the ones you're going to make the most money on. So, let's see. All right, so those are the positions. Aram says, "Thank you, sir. Glad to be here." Oh, thank you. I really am glad you're here. If you have any questions, please let me know. Hi, Murat. How you doing, my friend? Good to see you. This is our friend from Norway. It's Murat. Murat says, "What happened yesterday, Greg? One of your dogs didn't unplug the internet cable." Yeah, I don't know what happened. My internet did not go out, but the connection between my encoder and YouTube went out. So I guess it was out for a long time. I didn't know. I was just jabbing away because on my encoder it looked like everything was fine. And then I looked over on the other screen on YouTube and it showed that there's no connection. And then it connected and then unconnected. And I was like, yep, I guess that's all. So anyway, hopefully it will hang through here. We had quite a few viewers yesterday. I don't know if that makes a difference. I'm not like a huge tech guy. But for some reason, maybe the bandwidth, I'm not sure what happened. So hopefully that won't happen today. If it does, you'll know why. So apologize in advance. Steve Burns says, my Merrill Edge trades are 0 up to 100 trades a month due to the capital I keep with them. I save a lot of money. Yeah, for sure. Yeah, that's a good deal, Steve. Because I don't think you trade more than 100 times a month, do you? I wouldn't think you do. But, it's a good point that Steve brings up. You can always negotiate with your broker, right? You can always negotiate. So, if you don't like the price you're paying, negotiate with them. And like I said, I use Interactive Brokers. It's really good. And like I said, the average trade's about $1. So, but commission prices do add up, and especially if you have a small account, you can't compete with that. You can't compete with if you're paying high commissions. The numbers just don't work, I'm telling you. Unless you're like a long-term trader. But if you're more of an active trader like I am, those commissions will eat you up. So one of the best returns that you can get immediately and 100% for sure is finding yourself a low-cost broker. Question: if you start today with $1 and double it every year, how much money can you get in 20 years? Murat, I'm not that smart. I don't know. I don't know. Question 2. Okay, I pass on question 1. Question 2, if you lose 30% of your profit every year, meaning 70% increase every year, how much money can you get in 20 years? I don't know. I do not know. Do you know, Murat? If you do, tell us. Sophomore Serpin, SPLK. Hey, how you doing today? Thanks for coming by. I'm not sure what SPLK means, but thank you for coming by. I appreciate it. All right. So let's take a look here. Okay. So listen, as you know, I like to do a little bit on trader psychology. Every day, just a little snippet. Hopefully you guys can internalize this and it will start sinking in. But, psychology is so important, and there's so many traps you can fall into with fear and greed and frustration and anxiety with your trading. And so, try to work on this. This is the most important. But this is from our friend Thomas Payne at Trader T Payne on Twitter. He has a great channel. He posts really good information on trader psychology. So I really do recommend that you subscribe to him on Twitter if you haven't. But Thomas says, forming an opinion exposes you to emotional vulnerability. Emotional vulnerability exposes you to clouded judgment. Clouded judgment exposes you to additional mistakes. Therefore, opinions lead to more mistakes. And guys, this is so true. And if you've read Market Wizards, I can't remember in there who talked about this, but they talked about this very thing. And they're like, don't form strong opinions about stocks. And whatever you do, don't voice them to people that you know, because then you're more likely to have to stick by those opinions. For example, back when I first started trading, I had this opinion on Enron. Everybody, I was a big bull on Enron. And I said, oh no, it's going to go back up because of this, or it's going to go back because of that. All my friends knew it. I should have got out of the damn stock, right? But I kind of voiced my opinion about a stock, and I was stubborn with the stock. So, don't form really strong opinions about stuff. Be flexible. Don't, if you think Apple's going up, I know it. Well, you don't really know it, right? And if you're telling everybody about it, probably Bitcoin is the most appropriate example. If you're a big, huge Bitcoin believer, that's totally fine. I have no idea where it's going to go. But, don't get to the point where you're such a believer in something that you don't let the price action influence you. I guess what I mean is, if you're really bullish on a particular stock, or bullish on something like Bitcoin, and it's starting to go against you, keep that in mind, that the market's telling you you're wrong, right? I mean, if Bitcoin ever went to zero, of course, there's going to be people that are going to write it all the way back down because they're such big believers. And I have no opinion on Bitcoin, but I'm just trying to use it as an example. But forming an opinion exposes you to emotional vulnerability. Emotional vulnerability exposes you to clouded judgment. Clouded judgment exposes you to mistakes. Therefore, opinions lead to more mistakes. So, my best advice there with opinions are, if you have, it's fine to have an opinion about something. If it's going your way, that's great. But if the price action is going against you, just get out of the thing until it starts going back up in the direction of your opinion. So anyway, I hope that helps. Murat says 1 million. Answer 2:4,000. Steve Burns, 525,000, doubling $1 for 20 days. Look at Steve showing off. Does not surprise me he had the answer. Nice job, Steve. Oh, okay. Sophomores, can you look at SPLK? Yes, I can. And usually what I'm going to do, I'm going to look at it at the end of the day after the market closes, so we have time to get through this. So I hope that's okay, but I'll definitely look at it. To be a millionaire in 20 years, you need one trade, which gives you 100% return per year. It's crazy when you think about it. Nothing beats mathematics. That is true. All right. Hey, Mount Doji, what's going on, buddy? Good to see you, my friend. Think you had a couple good trades today, right? I think you have, do you have McDonald's? You have McDonald's, and I think maybe you have Nike as well. So, all right, well, let's get to it. Now I'm all paranoid because it's showing my bit rate is down. So anyway, guys, I hope we hang in there. If not, I apologize. I'll have to try to figure out what I can do to fix this problem, if indeed we have the problem. I don't know. All right. Well, let's start with Apple here. All right, so Apple's having a decent day. It's up, it gapped up, it's running into the -1 ATR channel, so I don't like that so much. There's really no signal here for me today to take a trade. Adobe's up pretty nice today. Looks like currently it's rejecting that 100-day moving average to the upside. Under 50, so it's showing a lack of momentum there. This is pretty range bound, so really really nothing that I'm interested in. Yeah, I thought you had Nike, Mount Doji. Good for you. And McDonald's. I'm loving it, and you're doing it, right? Good trading, buddy. All right, AGQ. So AGQ is interesting. This is a huge reversal bar, huge bearish engulfing bar. We knew it was getting a little high, right? We've been talking about that the last few days, but you know, is there anything I want to do with this? I certainly don't want anything to do with this. It's still way too high. It's too volatile. Tons of volume to the downside today. You know, for me to get interested in AGQ, I'd have to have the price come back in the value zone, which are the green lines, the 1 and -1 ATR channel, or the 5 EMA crossing under the 20 EMA and then back over. So that's about the only thing I would be interested in AGQ. And we took that exact trade back here when the 5 was under the 20, crossed back over, and this was a mechanical trade, stayed in. I ran out of shares about here. Obviously there was a lot more to the trade, but it was nice to take this big move here. There was nowhere else I got back into the trade. So nothing on AGQ today. Advanced Micro Devices had a nice gap up today, did reject the 50 moving average today. It's still above 51 on the RSI. It's kind of range bound here. You know, let's be careful. I know we're having a big day up and it seems exciting and it gets everybody's FOMO, you know, turboed up a little bit, but you know, let's try to put those emotions aside and really just look at the charts and not get too many positions, not get too much correlation, because a lot of these rallies have been false rallies that have just collapsed after. So let's keep that in mind. Speaking of Amazon, so we do have Amazon. We bought this back here. It's moved up nicely, hit 2 profit targets, made a higher high today. We still don't have a lower low, MACD1 positive. So I am going to keep this position at least one more day. If it goes back against me tomorrow, I'll go ahead and just lock in profits. Boeing, nice day today. Surprise, surprise, ran into resistance right at the 3rd ATR channel. Remember, about 90% of prices stay under the 3rd ATR channel and over the -3rd ATR channel. So whenever you start getting up in here, you're pulling the rubber band pretty tight. So nothing there. Alibaba, well, this was the one that got away. I was thinking about buying this yesterday with this V1. Here's day 1, day 2. Day 2 washes out day 1, closes above day 1, and closed above the 200-day moving average, and closed right in the value zone. But I chose Etsy instead. And this one's a big monster up today. So unfortunately, this was the one that got away. But in hindsight, you're like, why didn't I take that? But I didn't know what was going to be like this, right? You're scared of something like this. So anyway, I certainly wouldn't buy it now. If I was in the trade, I would stay in it. It looks like it's closing above the 1 ATR channel. It looks pretty good, actually, but I can't buy it here. The risk to reward's not good. This would have been the place to buy it, but I passed on it. Caterpillar had a nice V1 yesterday. Here was the previous low. We were in the range. We went out, down below the range, back above the range. That was all good and positive. You know, would I buy it here today? No. Again, the place to buy it was yesterday. I can't buy it here today. It's a 44 RSI. Most likely we're going to run into some resistance at the 50 RSI, so it doesn't give me a risk to reward. But on the bright side, we have not closed over the 10-day EMA for a long time, and it looks like we are today. So that's a positive sign. DDM we bought that a few days ago with the close over the 200. We hit 2 profit targets today. Found some resistance right at the -1 or at the 1 ATR, but this is a mechanical trade. I'm going to stay in this, phase out as long as I have it, and I will close out of this position to the downside if we close under the 200. Disney, you know, Disney had this gap. It did take out this fractal. The fractal is when you have a high with two lower highs to the left, two lower highs to the right. I mean, this is positive that this happened. MACD went positive. We're over 50 RSI. I don't like that we got rejected by the -1 or by the 1 ATR channel. We're probably going to have some resistance up here. I'm going to go ahead and just pass on this. But you know, if someone were to buy this, I would probably use the low of today's gap up day as my stop. So you know, this one could go either way. I mean, I'm torn on it, but I'm going to just act on the conservative side here today. But it did take out this fractal. MACD went positive. I don't like the gap, honestly. The gap scares me a little, and also that we rejected the negative or the 1 ATR channel. So I'm just going to pass on Disney. Etsy it was a nice setup yesterday with this higher low V2. Did hit one profit target. It's right about where I bought it yesterday. So I will probably just keep this for one more day. Ford Motor Company back above the 200, came from a lower low though. That concerns me because the people that bought here, once it starts stalling out here, they'll probably start to sell, and that might make it come down. I'd like to see this come down under the 200, create a higher low, and then go back over the 200. Maybe. I mean, it may not get there, but I'm not going to take anything today. Facebook having a really strong day. Getting close to the 50 RSI, has the gap. MACD went positive. You know, a lot of things MACD is going positive, which is good, but I just don't think this sets up for a good risk to reward at this point. Look at Five Below with the big gap up today after earnings. Wow, that was a monster. Not great price action today. It looks like the close is below the open, even though the close was above yesterday's close. This is, you know, this is kind of a bearish signal. It's too high for me to buy anyway. Gold. You know, it's interesting. We have this high here. This acted as resistance. Then we finally broke back. We finally broke out of the resistance. And now this previous resistance is going to act as support. And so it'll be interesting to see whether or not we will close above that support or close back into the old range. This isn't something I would want to short here, even though we have a higher high. We have a bullish, or excuse me, a bearish divergence. But I wouldn't short here because there are going to be some initial dip buyers here. And so I don't, you know, maybe you short this for one day or something. Maybe you have some follow through. But what I'd like to see now that we have this bearish divergence, I'd like to see this high come back down, higher, come back down. We're probably going to get some buyers at this dip. If we can then have an attempted rally that and then make a lower high and then fails, that would be the longer, easier down leg. So nothing on gold for me today. Google, I've been looking at Google. There's a good back-tested approach when the 10 SMA closes above the 30 SMA. You can see the 10 is at 1181.05, the 30 is at 1181.59. So this is not yet a valid cross, but if this does cross over in the coming days, that is a good back-tested, profitable approach to trading Google, and that's what I will use as my entry signal. So for today, I'm just going to go ahead and pass. Yes, Aram, I will. I will discuss that for sure. And but I'll do it. I'll do it after the market closes, just so I can get through this. But yes, I will, 100%. IBB is just a big chop fest. I'm looking for a 530 EMA cross. That's a good quantified back-tested approach. So nothing on IBB. Intel's having a nice day today. MACD crossover. Bullish MACD crossover. Looks like we're going to close above the 10-day moving average. We're at a 49 RSI. We've already rejected the 50 RSI intraday, which is a bit of a red flag to me. So there's some conflicting signals here. Rejected the 50 RSI to the upside. MACD is positive. We're still range bound here, so I'm going to pass on Intel. The Russell having a nice day. I would not be interested in the Russell until we close above the 200. Johnson and Johnson, nothing really going on here. Coca-Cola has been moving up nice and steady. It's above the it's above the 1 ATR channel, so there's nothing there for me. Actually down today. Lockheed Martin, it's just too high for me and range bound. There's real no clear signals there. MasterCard looks like it had some problems with this previous high. I couldn't buy it up here anyway. It's above the 1 ATR channel. You know, I would need some kind of dip on this. I'd like to see this come back in the value zone, move sideways, consolidate, get a V1, V2 to the upside. We did buy MasterCard back here on the 5th on a nice deep dip buy when we intraday we went under the 30, closed back over the 30, tagged the 100-day upward sloping 100-day moving average. We bought it right here and we scaled out. I scaled out all the way to there, so that was a nice trade. This is Altria. This is something new. Look at this volatility that happened between Philip Morris and Altria, which unfortunately I was involved in on a put, but not on this stock, on Philip Morris. But what I'm looking at, here we make this low. See how deep the bars are on the low? Then, of course, we have a rally. Now we make a lower low. But even though we're lower low, see how shallow the MACD bars are here compared to here? This is what's called a double bottom with a bullish divergence. So the stage is set for a possible rally here, but you need some kind of signal, and there's no signal here. A signal for me would be if in the coming days we go under the 30 RSI and then back over the 30 RSI, we have a big picture set up with a double bottom bullish divergence. But if we went under the 30 back over, it would give us a good risk to reward. We don't know if it would work, but it would certainly give us a good risk to reward with a decent setup. So nothing there yet. Merck, still kind of range bound. It's too high for me to buy up here. I'd need this to come back in the value zone, move sideways, look for V1, V2. Microsoft having a nice day, did gap up above all the moving averages. Looks like we're very close to a MACD crossover. It is range bound though. Has the 1 ATR channel here, so you know, if I'm not going to buy this, but if I did buy this, I would use a close below the low of today's, because low of the gap up day, which is today. But I'm not gonna buy that. You know, Netflix made this low rally equal to low. Here we had negative MACD bars. Here we had no MACD bars. So this was starting to get interesting, but there's really no trigger. Has moved up nicely today. I don't know if it's going to close above the 10-day. But at this point, I'd like to see it rally a couple more days, then have a couple days sell off, then get a higher low V1, V2. That's my plan on Netflix. So nothing today. Nike, go Mount Doji, buddy. Look at that. Mount Doji, did you buy? I think you bought that back over the 200, probably right here, I think, right? So it gives him a good risk to reward if he's wrong under the 200. And if he's right, it gives him multiples of that risk to the upside. So nice going. So, you know, now you're going to have to think about how you're going to manage this trade depending on what happens with it. Of course, if it keeps going up, keep keeping it. Philip Morris staying at 30.75 RSI. We went under the 30 on this big news day, back over. Had a nice rally yesterday. Today it looks like it's giving it back. Really nothing on Philip Morris today. It's pretty incredible. I think this pays like 6.5% dividend now at this point. But anyway, I need this to settle down before I get back re-involved. PayPal, I was considering buying PayPal yesterday, but we didn't have a valid V1. I think it missed it by a couple pennies. Obviously, I wish I would have bought that. Would have been a good trade. But with that gap, you know, a lot of times these gaps tend to fill. That's why I don't like gaps so much. So if any of you have PayPal, nice, but nothing for me. Qs, oh, I forgot to go over this. I did sell some puts on the Qs down here to 169. So if by September 20th the price stays above the 169 price, I will keep it. I've got about 70% of the premium already just in about 4 days. So if we have one more day up, I'll go ahead and exit this position and get 80% of the premium instead of having to wait all this time. But that's been a good profitable trade. Snapchat up a little bit today. Close under the 50, back over the 50, but I really don't see anything I like there. The SPY, we have that nice overnight gap SPY trade. We'll be buying this again at the end of the day like always. Square found some resistance at the 10-day. Working on a double bottom here with the bullish divergence, but there's really no trigger here. SSO is having a nice day. This is the double leverage SPY. Bonds. So, we talked yesterday about this being pretty toppy. We had the high, we had a higher high, we had MACD divergence, we had RSI divergence. Look how high the RSI was at this top. Even though we went higher, look how low. That's a bearish signal. But I would not want to short this, even though it's a false breakout to the upside. I don't want to short this because most likely maybe we have another day or two down, but then we're probably going to have some dip buyers that will come back in. That will probably create a reaction rally. And then if we can make a lower high than this high with the V1, V2 that triggers to the downside, that's where the longer, easier leg will be. So nothing on TLT today. Tesla having a nice day. Looks like it's going to close back above the 10 EMA. Problem is we're at a 46.23 RSI. The way I look at things, we're probably going to have some real resistance up here at the 50, which will dovetail with this previous high. So I just don't think the risk to reward is good. Twitter. Hey, Murat, nice day on Twitter today, buddy. Glad that's moving up for you. But no, this is a V2, but here's day one, here's day two, here's day three. Day two washes out day one, day three is closing above, but it's too high in the channel for me to buy. Natural gas having a big day today. I think that has to do with the hurricane. Nothing on natural gas. UNH, I considered taking this yesterday when we went under the 30, back over the 30, under the 30 ATR channel, back over the 30 ATR channel. What I didn't like though was this big bar. I didn't like getting in front of this bar, which is larger than one ATR channel. It's almost, well, it's two ATR channels. But this is moving up nicely. So, I'm not going to chase this here. I'd like to see it move up a couple more days, have a couple more days down, and then get a higher low V1. That would be the place, because the people that were lucky enough down here, as soon as they start seeing it failing up here, they're going to bail. That's going to cause selling pressure. That's going to cause it to move down. But then if buyers can take back control, then the people that bought it here, sold it here, they will be out of the equation and should allow for easier movement. So it's a little too early on UNH. Oil looks like it's trying to close above the 200, close above the 50, RSI. I don't like the downward sloping 200. It's had issues with that ever since, so I'm going to pass on that. The dollars, look at this. Big down day, but we've rallied ever since. Broke out above here. Nothing there for me. The VIX is interesting in the fact that we had this big move up on big volume. Now we've come back down, which is normal. We're still holding the 50 RSI, which is a little concerning, and we're holding the 100-day moving average here. If you were just doing an anticipatory trade, this is a pretty good lineup with the combination of the bounce off the 100 and the combination of the bounce under 50. I'm not going to go ahead. I'm not going to buy VIX here, but from a technical level, this very well could bounce here. Verizon, big day, had that gap up day, held the gap, nothing there. Oh, we have 5 minutes. All right, Walmart. It's too high outside of the channel. Energy looks pretty strong here. It's a 44 RSI. Again, 44 to 50 gives me 6 points theoretically to the upside. It just doesn't really give me that good of a risk to reward. So as with a lot of the other things, I like to see this move up another day or so, come back down, then get a higher low V1, V2. XLF we bought that with the close over the 200, hit 2 profit targets. So this one's fine, nothing going on there. Real estate, nothing. XLU, nothing. Healthcare, strong move back above the 200-day. This has been really choppy here, though. Not a lot of volume here either, so I'm not going to buy that. And the pharmaceuticals, down, down, down. Again, like to see it come up another day. People that were lucky enough to buy here, if it starts failing, they're going to sell. That will cause selling pressure. But then if we could get a V1, V2 from there, it might be interesting. So that being said, guys, I don't see anything. I mean, you know, Google, I definitely would have bought Google today if we had the 1050 cross, but we're not quite there yet. You know, a lot of these moves have been pretty choppy. Doesn't mean this one just won't keep going. But just going to put on my conservative hat, and you know, I've already got positions. So let's look at the current position, see if there's anything we need to do, want to do, because you're managing your current positions is more important than taking on new positions, in my opinion. All right, so Amazon is fine. Hit 2 profit targets. If we get a close below the previous day low, that will be my signal to just go ahead and lock in profits. DDM, 2 profit targets, moving up nicely, completely mechanical. I'll stay in this until I run out of shares and close underneath. Etsy, well, it is green again. So I am going to keep this, but if I get a close below the previous day's low, I'm definitely going to be out, because the relative strength on this is not very good today on such a big day. But glad that we hit the 1 profit target at least, but we'll just have to see what happens tomorrow. I mean, this is a coin flip. I mean, I could be talked into getting out of this, especially with the V1. Here's day 1, here's day 2. Day 1 certainly washes out day 1, but it hasn't closed below day 1, and it is holding the 10-day. So I am going to keep Etsy. This is a half position on Etsy, by the way. If I take a discretionary trade under the 200, I always use a half position. SPY, we're going to buy that at the end of the day. That was a really nice overnight gain on that. So I have a market on close order, so that will buy right at the end. And then XLF, 2 profit targets today. This is mechanical. So that is about it. So we'll just wait for the closing bell, and then I will get to your questions. We'll take a look at all the stocks that you want to look at. So there is 1 minute left. So there's nothing I have to do. You guys hold tight 1 second. I have to move the puppy around. So I'll be back about 20 seconds. Right. Got about 30 seconds. Hey, before the market closes, I wanted to share something with you guys. So I'm scrolling through Twitter today, and it's always strange when you scroll through Twitter and you actually see a picture of yourself or a video of yourself. This is me. I was doing a podcast with Christopher M. Uhl. And if you guys haven't subscribed, he has a great Twitter channel, at 10-Minute Trading, but he interviewed me for about an hour-long podcast. That's him, that's me. And the podcast is going to come out tomorrow. So, we talk about my trading history, and so if you guys are interested, I'll share a link tomorrow. But I guess the main thing I want to point out is scrolling through, I'm like, wait a minute, that's me. How the hell did I get in there? But I think it was a good interview, and hopefully it will be helpful, but I'll share it again tomorrow. All right, so the market closed, and let's see. So, all right, so we bought SPY at 292.58. So that's our new entry on SPY. 292.58. So that's the new overnight SPY entry point. And other than that, we didn't take any trades. So anyway, listen, question and answer time. I'm going to go over the comments, the previous comments. So if you have any questions, anything you'd like me to clarify, look at, please just type it in the chat. But real quick, before we get to answers, I just want to put in my daily plug, let everybody know that I do offer private one-on-one teaching and coaching lessons in the evening time via Skype. So, if you've been thinking about it, please reach out to me. My hourly rates and my email are in the description of this video. And then you can also reach out to me on Twitter. I hope this live stream is helping you. It's not like I hold anything back from my private clients. I teach everything that I know to both, but I think the biggest benefit of the one-on-one lessons is that, I ask a lot of questions about you, how you got into trading, what your challenges are, what your goals are, how much screen time you have available, what your time frames are. And then what I do is I create a customized lesson plan and approach based upon what you've told me. And, if you do become a client, kind of the format is that, of course I teach the lessons, but then when I'm done teaching, I really have you guys teach it back to me. And I throw a lot of curveballs at you. We look at a lot of charts. I have you break down a lot of charts. So, I think it's just a little bit better. Of course, one-on-one is always a better environment. So, if you've been thinking about it, please let me know. I've had really good success with my clients. I really love to teach. So you can contact me by email or on Twitter. And then also, if you like the channel and you haven't subscribed, I would appreciate if you would subscribe. And also, if you like today's live stream, if you found it valuable, if you're learning something, please do me a favor, hit the thumbs up button. It helps the channel grow, helps the channel get promoted out to more people. And I've had a lot of emails from people saying, I'm really glad I found the channel. You've changed the way that I look at trading with these risk to reward ratios, and it's made a positive impact. So that's why I started the channel. I really do want to help people trade better, especially want to help them lose less money at the very, very least. And you can help me by doing that if you hit the thumbs up button. So, all right. So enough of that business. And let's get to some connection still going. That's good. All right. Let me see real quick. All right. So Sompors wanted to look at SPLK. Splunk. All right. Well, so we did have a V1 today. Here's day one. Here's day two. Day two did wash out day one by a little bit and close back above. I like that it happened here at the third ATR channel, and on the third, let's see how low we got on the 30 RSI, or how low we got on the RSI. Looks like we got under. All in all, this is decent. I mean, we almost tagged the third ATR channel. Like I said, 90% of prices stay underneath the third ATR channel, stay above the negative third ATR channel. We did go under 30, back over 30, which is positive by itself. But in addition to that, we had a legitimate V1 entry, and we're close here. So, would I buy this? I don't know the company. We certainly are in a downtrend. One thing I do want to mention, though, even though we've been going down and down and down, the volume's gotten less and less and less, which in my opinion is bullish. So, would I take this trade here? You know, I would certainly take a half position because it's under the 200, but it's legitimate. It's a V1. This bar here washes out the previous low, closes back above yesterday's close. That is positive. We went under 30, back over 30, and we're down near the third ATR channel. So all in all, not too bad. If we look at it on the weekly, I mean, it's certainly being sold into. Looks like we have the 100-week below us. I mean, I don't think personally I would take this position now that I think about it after looking at the weekly. It's just a little too strong on the downside. But the under 30 back over 30 in the V1 certainly could be a good entry. But if I did take this trade, I would target the 50 RSI up here, and if it untriggered from today's washout bar, this is the washout bar today. I would, if here's the bar, the washout bar, here's about halfway. If we closed underneath halfway, that would be my exit signal. So if I'm wrong very small. If I'm right, I'm probably right up to here. So I hope that helps. Murat says, is your modem old? It's not that old, but that came to my mind as well, Murat. I had this amplifier put on the modem so it would be stronger when I started the podcast. But I think I think you're probably onto something. That probably is what it is. Aram says, could you please advise on your risk to reward? Could you please advise on what your risk reward is and elaborate why you didn't take the BABA trade? So big picture on my risk to reward, I like to have at least, a 2-to-1. So if I'm risking $1, I want my possible gain to be at least $2, and I have to factor that based upon the technicals. Let me see if I can find an example. So Intel. Let's say I bought Intel today here. Well, the way I look at this is that there's going to be, the 50 RSI is going to be somewhere right about here. So would I take the trade with my possible theoretical profit target being so close? No, I wouldn't, because my stop on this would probably be a close underneath the 10-day. So my theoretical stop is this much. My theoretical gain is only this much. So in order for me to take a trade, I have to look at the RSI, I have to look at the moving averages, and I have to decide based upon where I put my stop, do I have more than that to the upside 2 times, 3 times, 4 times that? And of course you've heard people say, okay, yeah, you got to have at least 2 or 3 times your reward to your risk, but you have to define that reward and risk based on technicals. So I hope that helps, but let's look at BABA. So yeah, I mean, all in all, I mean, the simple answer of why I didn't take this yesterday was I liked the Etsy trade better, and I didn't want to have too many positions, and obviously this was the one to take. But the setup here was this nice move up, move back down into the value zone, have sideways movement, and then I had a nice V1 back over the 200. Now I look at this, I'm like, why the hell didn't I take this? But I did like the Alibaba trade better. I'm sorry, I did like the Etsy trade better. But yeah, in hindsight, I should have taken this because it fit all the criteria. You know, the criteria is you need to make a higher high above the 1 ATR channel. You need to come back into the ATR channel. It did that. You have to stop going down, move sideways. It did that. And then you had this nice V1 entry. And on top of that, you also closed above the 200 days. So I'm not sure what I was thinking yesterday. I mean, I guess I do. I mean, I had Amazon, I had Etsy, I had the puts on the Qs. I just didn't want any more NASDAQ exposure. I guess but certainly, you know, this worked out well. Move up, down into the value zone, stop going down, started moving sideways, V1, completely legitimate V1 in the value zone, and close back above the 200. And would have been a good trade, but I didn't take it, unfortunately. So, you know, just for an example, though, going forward here, if I did have this position, I would use a close under today's low as my stop. I certainly wouldn't let it come all the way back down here. So I hope that helps, Aram. Subate, how you doing? Thank you for coming by. Hello, fellow master. You should receive a trophy for teaching our youth about trading. Oh, thank you very much. I appreciate that. I'm passionate about trying to teach young people about trading. I mean, listen, even if you guys are in your 20s or 30s, it's never too late. And I'm not really talking about trading. I'm talking about putting money away and investing it. You know, the biggest advantage you have with investing is being young, because you have as many years in order for that to grow and compound. And starting as young as possible, even, saving $1 a day, since, if you're a baby, or putting $1 a day away for your children, it's just $1 a day. And by the time they retire, if you consistently do it, it will grow into amounts that will blow your mind. So, even people in your 20s and 30s, you have so much time left in your life. You don't have to make risky decisions. You can just let the money, the compounding effect of money, work for you. So, if you guys are parents, put away $1 a day or $5 away for your kid. Do it every day, regardless of what the market's doing. I'm not talking about trading. I'm just putting the money away, putting it, in the S&P, something like that. And even if you don't have kids, tell people that that have kids to do that. Even if you're in your 20s and 30s, do it for yourself. If you can put $5 away or $1 a day, you are going to be so happy that you did. Even if it didn't make any money, wouldn't you be glad that you had it? Guys that are 20, 30, 40, even, don't you wish you had somewhere $1 a day that you would put away since you were a kid? You'd have many thousands, tens and tens of thousands of dollars right now, even if you would just have done it. So thank you very much. That was very kind of you to say. CPB. Well, Campbell Soup. So, we had this nice move up. We did move back down into the value zone. This is technically a V2. Here is day 1. Here is day 2. Here is day 3. Day 2 washed out day 1. Not a lot. Did gap up today, but then filled the gap. So that makes legitimate. But, this bar here was larger than 1 ATR. It's too high for me to buy here. This would be too chasey. This is very bullish for sure. This is very bullish, but from a trading perspective, it's above the 1 ATR channel. It has this previous high above it. What would be your risk to reward on this? You could possibly use the 10-day, but this does not offer a good risk to reward, because certainly what are we at, a 59 RSI. You know, probably your potential reward is right in this range, but your risk is, if you use the V1's V2, the initial stop actually would, I guess the really realistic stop would be here, halfway of the washout bar. But look how far you are from here to here compared to here to here. It's like a 1-to-1 ratio. So the risk to reward ratio is not that good. You know, the most important part with trading, guys, is position so you have a good risk to reward. If you're wrong quickly and you're wrong small, based upon where your stop is, your technical stop's below you. And when you're right, you have 2, 3, 4 times that to the upside based upon technicals. So you know, this is bullish for sure. I mean, big volume, everything, this is bullish, but I wouldn't buy it here. It's above the channel. You have this above it. And if you really wanted to get into Campbell soup, I would wait for at least a pullback, see if you could come back, pull back, and about halfway here and just get a little better entry. Mount Doji says, what does it mean when you have 2 green dojis to each other? I see one on GGN. Well, to me, it just shows indecisiveness, Mount Doji. To me, I mean, it just shows sidewards movement, price discovery, sidewards movement. You know, I mean, maybe we'll have more going forward, but you know, as you know, when things move sideways, they're eventually, when they consolidate and move sideways, you have big moves down, and then after you have big moves, then you have consolidation again, and you have another up move. So large bars lead to small bars lead to large bars, and right now we're in small bar mode. Mount Doji, I must listen to that podcast, sounds awesome. Oh, thanks, man. Yeah, it comes out tomorrow, so I'll post the link. Mount Doji says, you'd be a guest on my podcast if I had one. You should start one up, man. Should start one up. Thank you, though. I would be a guest, too. Murat says, I think VIX missed the momentum and eventually crossed the moving average line. Global credit impulse started increasing again. Greg, I would forward the report to you. S&P will benefit from it. Okay, sounds good. Sounds good. I just want to make sure I understand that your comment. I think VIX missed the momentum and eventually crossed the moving average line. Well, let's look at it. So on the VIX, the VXX, it did close above 50, still did bounce off the 100, lost the 20. Let's look at the actual VIX index. So this lost the 20, did not hold halfway of this bar. So yeah. You know, probably want to watch VIX around the 100s because that's where it caught support last time. And, you know, after today's big move, I wouldn't be surprised with some follow through tomorrow. Ramble Ron, hey, buddy. Enjoying your week off? Thank you for coming. Appreciate it. Sampors, you're certainly welcome. I hope that helped. Thank you for the elaboration on both the risk reward and Baba. You're certainly welcome. I know Subate, he's 14. Oh, good. That's great. Glad to have young people in here. Hope it's helping them. You heard that one. You heard that one at Murti. CPB having earnings tomorrow morning. Yeah, there's a little earning sign. So you guys know how I look at earnings. I mean, you can make a lot of money quickly or you can lose a lot of money betting on earnings. So I just don't do it. Murat says the problem with CPB, there is earnings tomorrow. The stock is forming cup and handle and just came back to the breakout position. Since it came to the breakout position right before earnings, be careful. Yeah, always be careful in front of earnings. You know, yes, it is forming a cup and handle here, but really to be a legitimate cup and handle, we'd have to come back down a little bit and then break out of there. So if we, you know, here we have a high, we come down, we come up at least 3/4, then we come back down. And then if we broke above, that would be the cup and handle. And you know why cup and handle works, Murat? It's what I've been telling you guys. The people that bought down here, if they're lucky enough to buy this bottom, when it moves up, they're going to keep it as long as it holds. If it stops going up and moves down, they're going to bail. But then if it's strong enough to go back up, then the people that bought here sold here. That's why cup and handles work. That's why higher low V1 V1 and V2 entries work. Essentially, higher low V1 V2 entries are basically cup and handle types of trades. All right. So Mount Doji had Nike, wonderful trade, my friend. Mount Doji also had McDonald's, so that's really good. You're gonna have to look here, see what's happening with this previous resistance. So yeah, we'll see if we have some follow through tomorrow. It would be nice. Really glad and thankful to have such a nice day today. So anyway, last chance for questions. Otherwise, I'm gonna get up in the mountains and go hiking. But Murat, thank you so much for coming by and always for your great comments. Appreciate that. Sampors, hope I pronounced that correctly, but thank you very much for coming by. Appreciate you having here. Subate. Very nice to have you here, my friend. I hope you keep coming back, and I hope you can put away a little money each day for the rest of your life. It will make a big difference, so please do that. Aram Hussein, very nice to see you again. I'm glad you're part of the group. Thank you for coming back. Ramble Ron, thank you, my friend. I hope you're doing well, and I hope you are having a good week off. Mount Doji, congratulations again on McDonald's and Nike. Let's see. Stephen Burns, thank you, my friend. Always appreciate you coming by. It's always nice to have you here. It's an honor. Looking forward to your video newsletter tonight. That's when I get to sit back and listen to someone else talk about their analysis. And if you guys haven't checked out Stephen Burns' website, let me just put this in real quick because it's a great website. I subscribe to it personally. He has really good articles on here that are free. He has some really good trading courses. He has this weekly video newsletter. This is what I'm talking about. 3 times a week he comes out and he does his own analysis, kind of like what I do during the day on this podcast. But you know, Steve's a master, and so I look forward to it. I will definitely be listening to that tonight. It's newtraderu.com, and you can also follow him on Twitter at sjosephburns. But thanks, Steve. Appreciate it. Glad you had a good day today. And did I miss anyone else? John, great seeing you, John. Appreciate you coming by. So anyway, I hope you guys have a good rest of your day. I'm glad we made it through without any technical difficulties today. And God willing, I will see everyone tomorrow, right? So have a good rest of your day and go out and do something nice for somebody, all right? All right, take care, everybody. Bye-bye. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.